trading and getting people involved in trading. So what he has to offer, and now we can offer through our company, through the Silver Investment Group, is an affiliate program where he actually offers automated trading services. So there's two separate services. He offers what he calls the MAM, M-A-M program, and the GRID program. The GRID program is $1,000 minimum investment into a trading account, and it's a fully automated trading service. So you put $1,000 in an account, he takes a 30% profit share, 30% of the profit every month, and then you keep the rest in your account. He's had guys in there, and Ryan, you can maybe type in the chat. I don't know if you're in the GRID or not, but he's had guys in there that are making a lot of money on the GRID program. And that's a fully automated system where he's not having to do anything at all. The other service he offers is the MAM service, like I said, which is actually a trade copier. So it's not a fully automated service where the computer program scans the market and finds those setups for you. The MAM is actually when Kyle's looking at the charts, he has a separate strategy from what I teach, completely separate, and he applies those trades on his personal account, and then they're copied to your account. So you link to his account, and people have seen a lot of good results there. I think he told me last week on Thursday, he had a guy, his smallest account was $150, and that account made $67 on Thursday alone. So, excuse me, a lot of good value there. So the reason for the partnership is because now through the Silver Investment Group, we can offer to you guys two options. You can learn how to trade on your own and become a self-sufficient trader like Dom, like myself, or you can get involved in the automated side of trading with Kyle and Mo Money FX, or you could do all three. Here, Ryan said, I'm in the MAM, but yes, I've seen good results in both the MAM and the GRID. There you go. So I've seen the results. I've seen people in the group. Ryan here on the call comes from the group. Kyle's reputation speaks for himself. Like it works. So that's why I felt comfortable partnering with him. So that's that. The rest that I wanted to go into with you guys is the deal that I'm going to offer you, and then I want to show you some charts, show you some S1 patterns, maybe some S2 patterns, and we'll go from there. So before I get into that, from my website, guys, from the Silver Investment Group main site, you can get to our daily analysis, which I stopped doing them daily. I'm going to be doing them more specific. However, for our professional trading team, you're getting one daily review every single day, no matter what. So while I stopped doing these vlogs, if you join that professional trading team, you're going to get these daily videos that really do walk you through everything that I see in the market. Cool. Do we have any? If you have any questions, guys, as we go, just make sure to type them in the chat. Dom, am I covering everything so far?
Yeah.
Good. All right, so let's look at some charts. So, cool. Close this. All right. So, what we'll pay attention to first, let me pull this up on my other screen. Let's show you guys some good trades first. So these are all trades that I go over in the video course. So before we get into the more recent trades from this month, I want to show you from last month in March that I actually included in the video course. So I know that some of you come from different knowledge, bases, but pretty much what we're all going to need to be familiar with moving forward in this call is that I'm using TradingView to show you these charts. And on TradingView, you can actually find my chart setups to make your charts look just like this. So the way that you can do that, I'll show you really quickly, is by coming to TradingView. If you search indicators up here, you can type in Silver Investment Group. You can see I have my TDI and my moving averages. All you need to do is click 1, 2, and then your charts will look just like this. All right. What we're also looking at, just so everybody understands here, is the 15-minute time frame on the right side and then the 1-minute time frame on the left side. That's how we go in every day and are able to make sure we're finding precise entries. All right. Whoops, don't want to move that. Cool. So let's get into some of these charts. So off the bat, we don't look to trade every single day, guys. With this S1 pattern, which is what we're going to focus on here, we're not looking to trade every single day because it's not going to present every single day. If it does present, it's going to present in a trending pair, and it's probably going to present in another currency pair that correlates to that trending pair. All right. So we look for currencies that are running. So as you see here, when you look on the left side of the screen over here, excuse me, at all the charts that I have for March, which are the perfect trades. I mark up the winners, the losers, and the perfect ones. You can see some days you get correlating pairs. So let's just jump right in here on March 7th. We have a long entry here on AUD NZD, and on the same day, we have a short entry here on NZD JPY. So the first thing you guys need to see is that this is a trend correlating pattern. AUD NZD with AUD on the front and NZD on the back, we went long. Then you took an NZD pair with NZD on the front end, JPY on the back end, and you took it short. So notice how this NZD pair dropped and this NZD pair on the back end went long. That's the correlation that we tend to see. And if we traded two pairs with NZD in the front end, they both would have gone the same way. In this example, short. And if you traded two pairs with with NZD on the back end, they both would have gone long. So we look for that correlation because it makes us more confident in the direction of the entire pair, no matter what it's crossing with, whatever currency it's crossing with. It doesn't matter. As long as we can find one pair that's trending, we're going to be able to find entries on it. So that's first. Second is we really do use the TDI more than anything. It's the first thing that we look at every single morning. On the TDI, we have a solid black line that runs right through the middle, and we're always going to look at the 15-minute time frame first. If the TDI, which is the volatility bands, my yellow liquid 50, my red trend line, and my green RSI, if this entire TDI is above the stationary 50, I consider it a buying market. If it's below the stationary 50, I consider it a selling market. So let's get into right off the bat why we don't trade every day. If the candles don't look how they are here with the EMAs, which are these colorful lines, if you don't see them trending in the same direction that the TDI is trending, it's probably something to avoid. What I've learned over the past 2 years of trading is that it's much more important for me to know what not to get involved in than what to get involved in. So I know what a good trade looks like, and I can definitely now tell you what a bad trade looks like. And there's plenty more bad trades than there are good. And that's the point of trading. That's why 90% of people lose 90% of their money in the first 90 days. So by understanding and focusing on only what I know, we're able to go in and find these exact technical patterns that are going to prove to be profitable for us. So again, here we see a buying TDI. Clearly, only thing we should be doing in this market is going long. And if you don't understand that, then you need to go back to baby pips and really understand what trend means, what exponential moving averages are, and things like that. In the video course, guys, I go into details about every little nuance that you need to understand in this chart. You need to understand what this RSI leaving the volatility bands, we call it a shark fin. You need to understand what that means. You need to understand how to identify consolidation levels here. I'm going to draw them for you right now. Here, if I could draw a red line, that'd be cool. Here and here. You want to learn how to identify levels, just basic levels like that a lot of you would say, oh, Austin, I can see that in hindsight. But I want you to see how we were able to identify it here at the entry point, how we knew that that was where the consolidation was beginning, okay? In the S1 pattern video course, we go into detail about all that stuff. Now, this trade in particular, we had a really clear buying market all day. This entire TDI was saying long. We only look to trade between 9 and noon, 9 a.m. Eastern and noon. So at 9 a.m., you can see here, we had what we consider a railroad pattern formation. It's a candlestick formation that all it represents to us is price. So what you can see here is price dropped in this black candle, held here, spiked up, but came back, took another 15 minutes, started to come up, took another 15 minutes, and there, within an hour, price returned to the exact level. So you can see it dropped and came back within an hour, forming what we would consider railroad tracks. So I'm even giving you guys some detail from the video course right here. This is what we would consider 15-minute railroad formation. When you have a railroad formation like this, we know that price should now continue in the direction that it was previously moving with trend. Look which direction the EMAs are telling you. The purple dragon's telling you long. Oops. Sorry. Hold on. This is telling you to go long. The water is telling you to go long. If I could draw arrows, that'd be great. That's telling you to go long. You can see the Mayo down here is telling you to go long. Everything's telling you the only thing you should be doing is looking for buy positions. Now, you're going to say, that's great, Austin. That's trend. I can tell, like, thank you. How do I know exactly where to get in, when to get out? So in this trade in particular, when we trade off the 15-minute time frame with 15-minute railroad formations, we don't use a 1 minute for precise entry. Instead, what we do is apply a smaller stop loss, because there are two types of entries, shift candles and railroads. Shift candles require us to use the 1 minute chart to find the precise entry after the pain. We don't want to sit through pain, because that's when sometimes the spread opens up, the candles get erratic, and we can get stopped out. By using the 1 minute, we're able to find precise entries. So here, we don't even need a 1 minute entry, because we're catching a 15-minute railroad formation, okay? With the 15-minute railroad formation and a smaller stop loss, which you can see here was only at 15 pips, we were plenty safe. You can see with all this space here, plenty of space. And it paid us over 30 if we held till the end of the day, which everyone that watches our video course, and again, here's some more knowledge for you guys, we never hold into the end of the day. I'm always out of my trades before the close of day for my broker, and I'm on Trader's Way and Owanda. So for both of them, I'm out of all my trades by 4:30, 5 o'clock at the latest. Most of the time, I'm done by 1 or 2. I know if it's going to be in profit or not, and most of the time, because we're taking bigger lots, I've made plenty of money that I don't want to be involved in it anyway. So just to recap on this trade before I go into some more, and again, let me see if anyone's got questions, make sure to hit them in the chat. Yeah, we're good. Before I go into this trade, you guys should start to understand we're not looking for a lot of trades. We're looking for this pattern to present, and then we're trying to stack a lot of, stack lots on it so that we can make more money on a guaranteed movement rather than placing small lots all over the place trying to predict a ton of movement. You can see here also that when we really break this down and you break into analysis, like some of you know support and resistance, you could have seen here that there was a clear resistance level at that high, right? When the consolidation formed here, we were watching it to break, and you can see this is just regular support and resistance. If anything, this can be an ascending triangle too. Like this is just basic stuff that we still are applying. However, my technical patterns in the TDI in combination with the EMAs are going to show you the exact time to get in. This isn't going to work on every pair every day. This is going to work on certain pairs that are trending on certain days of the week. So here we were going long on AUD NZD, and we were able to find 30 pips in profit. Same day, about an hour later, an hour and a half later, this is a trade where you do get a 1 minute entry. Okay, so you can see here, and again, I don't want to give you guys too much information because I got to make sure you join and buy the video course. But we have what we need. We have our what's with these white lines? Who the fuck uses white lines? We have our pattern present here on the 1 minute in an open entry window here on the 15 minute. So this is how I want you guys to think about it. The reason we use the 15-minute time frame and the 1 minute time frame is because the 15-minute is going to be like the glass pane of a window. Imagine you had to open a window and there's a piece of glass there, right? Once you get the entry window to open or that glass to be lifted on your window, that's great. But sometimes it's not safe to jump through that window yet because there's a screen there. What the 1 minute chart allows us to do is actually punch a hole through that screen first before jumping through the window, so we have no pain at all. So when you find 1 minute entries, and again, in this example, it's kind of shitty because you have a large spread, but majority of the time when you find a 1 minute entry, you're sitting in a lot less pain. So let's break this one down. You have the formation open up on the 15 minute. It throws this entry. However, on the 15 minute, then it pulls back out of position. When the RSI pulls back up into here, it pulls out of what we would consider an entry position. And it throws a 1 minute entry. So it threw the 1 minute entry and then moved out of the entry position on the 15. So what we could do then is decide, all right, do I want to pull my trade, take my small loss, and wait for my re-entry signal, or take the risk and hold in? Here, if you applied the correct stop loss, which is 15 pips plus spread, you were able to stay safe. You can see here there was one pin right here, but that pin never got you because a 17 pip stop loss kept you safe. So you sat through the pain, and we'll dive into this really detailed here. I'm not going to hold back too much. You got a railroad formation there and another railroad formation here that I boxed off in white. So both railroad formations after your entry signal that you're safe. So if you held in to here, you could have said, okay, well, that's a railroad. I might be okay. Here's another railroad. I'm moving into profit. I'm really okay. And when you get really good, guys, Dom does this better than anybody else, and he'll tell you how risky it is. He'll add entries on things like this. When he holds in a trade and he starts to see it come back in his direction, he'll add entries. So when you really understand what the market's doing, and that's only because you have confidence in the TDI. You see how the TDI then comes back through, opening up an entry. It tests the liquid 50 there and holds it. It's showing us that it was going to continue down. However, that first entry wasn't done. He had more orders to grab up here, and once he grabbed them, then he was ready to make the move. I hope that's making sense to everybody. I know I'm kind of being a little vague on the details because I don't want to go into too much without you guys buying the course. However, I'm hoping you start to see. You see, we got some chat there. That's cool that it notifies me. Makes sense. Cool. Let's go into a few more. So this right here, again.
So what we're doing is we're giving you
Dom,
a
your
whole
mic is all messed up. Hold on, Dom.
Go ahead.
Your mic is all messed up.
Is it? How about
Yeah,
now?
it's all messed up.
All right.
No, just leave and come back for me real quick.
Yep.
When Dom gets back, we'll make sure to let him say what he needs to say. But I want to show you guys again before we go into the next, before he goes into that, look at the next day. So again, the March 7th, 2 trades. Okay. March 8th, no trades. Nothing. Like not a good trade, not a bad trade. I have nothing marked for March 8th. March 9th, 2 trades. AUDCHF, NZDCHF. Look how we're taking both of those trades short. Why? Someone tell me, why are we taking both of these short? AUDCHF and NZDCHF. Because we're looking for correlating pairs. They both have CHF, the Swiss franc, on the back end. That makes sense. You're shorting one. Look, if you're shorting the Swiss franc on the back end of one pair, you should be looking at every pair with the Swiss franc on the back end to see if you should short that one as well.
How's that? Is that better?
Dom, you back?
Yeah.
No, it still sounds shitty. Maybe it's me. Hold on. Dub says he can hear you clear.
Okay.
Say it again, Dom.
Can you hear me?
Now you're good. Yeah, maybe it's me. Go ahead. Say what you need to say to the guys.
All right. So yeah, basically what we're doing here is we're showing you a lot. Like he's giving you little hints into like the specific entries and stuff like that that we use to grab these things. And a lot of people give you a lot of generalization, like railroads you've heard before, and you've heard a lot of these different formations. But what we're going to do is every week we're going to, after you watch your video course and you get your updates, we're going to give you very precise indicators of why we're entering, when things look good but we're still not entering because there's certain reasons. So it's very, very detailed. I don't think a lot of people offer the detail that Austin offers here when you actually get into the weekly webinars. You're gonna literally get precise entries. You're also to get analysis on your trades, and you're going to get an opportunity to talk, directly to Austin or to me and find out, like, why didn't this work, or why did this work, or, how can I improve? So it's something that I think that a lot of people are not offering, because a lot of people, I think, use patterns and analysis that like works in general, and it's not real specific like Austin can offer you. So that's what I wanted to say before my microphone didn't work.
I think it was my headphones. Yeah, it was my headphones. All right, thank you, Dom. So pretty much what Dom is saying, guys, is that what you're going to get here, if you decide to join with us after today, we're going to go through a few more chart markups, but you're just going to get, I'm going to make sure you're making money. Like, me and Dom are not millionaires yet. We're not going to lie to you about anything, and we're just going to help you as much as we can. Like, that's all it is. This isn't fucking rocket science. Like, trading is hard enough as it is. I don't need you guys to throw me a ton of money every month or anything like that to learn this, because I know it's going to be difficult for you on your own. Like, it's hard to do this. So anything I can do to help you guys make money, I want to do it. And anytime I come up with a new strategy or a new idea or a new pattern, I want you guys to get it and then apply it and make more money than me. But I can only do that if we have a financial commitment on both ends, your end and my end. So let's talk about that for a second. My offer to you guys today is, if you sign up with me within the next 2 days, so today or tomorrow, by the end of the day tomorrow, if I hear from you, I will send you a code to sign up for the professional trading team for $50 this month. So you get 50% off your first month, and I'll send you a download link for the video course. So you'll get the video course, and you'll be in our daily watch list for the next month for $50. Then after that, if you decide to continue to work with us and you continue to want access to the video course and everything like that, it's going to go up to $100 a month and $99. However, if you're not seeing, value, and you're not seeing successful trades after your first month, we need to talk and make sure that you're giving the proper effort, and it's not just, a one-sided thing here. So I really want to make sure that I'm helping you guys in every way that I can. Let's talk about these 2 trades, and then maybe we'll do a few more. We'll see how I'm feeling. All right, so here, these ones are interesting because there's something that I didn't mention in the last 2 charts that I should mention now. When we are looking to not trade, when we're looking to avoid as many trades as possible, you're going to hear me talk a lot about reset, accumulation, whatever you want to call it, consolidation. I don't care. If I have any feeling and any bone in my body that it is reset, I'm going to avoid that trade completely, okay? These trades here, when they're below the stationary 50, like you can see the whole TDI is here, or above the stationary 50 like the chart was last time, those trades are the ones that are not in reset. excuse me, when it's trending like this under that stationary 50, most of it here above the stationary 50, these are trades. Doesn't matter which one we look at. This one might be coming into reset, but it ended up working. Here, clearly not in reset, above the stationary 50, below the stationary 50. Okay, these are the trending trades. Look at that drop, right? And we only took 30 out of this trade. Look at that. So when we find these trending positions, guys, they really do tend to run. Here we go. Let's see what's going on. So basically, if the TDI channel is at or around 50, then it's not trending. Correct. And you'll see a lot of times. Let's actually, I'm glad you're asking questions. I want to give you, the more questions you guys ask me, the more info I'll give you. If we look here, one day in April, this one, like this. Okay. Actually, I'll give you a better one. Here, perfect. Okay, you see this TDI? I took this trade because I'm an asshole and I lost. See this here? If you had to tell me, Austin, is that above, below, or split the stationary 50, what would it be? Very clearly, it's split. It's right at the 50. Half of it is above, half of it's below. So I call this split the stationary 50. I just don't trade this pair all day. Just stay away. Because the whole thing is going to do whatever it wants to do. It's going to move in any direction that it wants to. That's really what it tells me. Because if you look at this, I delete all my nonsense, right? Watch. If I take this box and I go like this, what does that look like it's going to do? That thing is going long. EMAs are pointing up. Everything's pointing up. However, so with that TDI at the 50, how do you handle double top? I don't even look at it like a double top. All those technical formations that people look at, my basic method, the way that I learned to trade, the first video course, like my first mentor, his name was Steve. The way that he taught me how to trade was that those technical formations are bullshit because everybody knows them. So you should know them and see them, but not trade them because everyone sees them and so do the market makers. So I guess now is a good time to say my philosophy about all this trading stuff, guys, is that there's so many unknowns, there's so many uncertainties that I just stick to what I know. You could tell me that there's a market maker and it's a little man sitting at a desk clicking buttons. You could tell me it's a computer system. You could tell me that it's all computers. You could tell me that the banks are rigging everything. Like, there's so many fucking uncertainties that if anyone tells you they know what's going on, they're wrong. Like, they're lying to you. So I've done enough. All I know is chart markups. All I know is what's happened in the past, that with these exact parameters on my chart, what have they shown me before? It's shown me that if you trade these shitty TDIs, you will win some and lose some. And I don't like losing at all because I like to trade 5, 10 standards and win those trades only. I'm not trying to lose 5 or 10 standards. So even when this thing is telling me, this pair on GBP CAD, when this trade says it's trending up, and if I move this a little bit more here, let me draw, I'm really going to give you guys detail on this one. This is a 3-candle formation. Okay, this is what we call a Rocky. Price dropped, held for 15 minutes and moves up. See how it looks like Rocky when he ran up the steps and the arms are pointing up? That's why we call it that. It hit the EMA that we call the catch-up, which is a good indicator that it should continue to move up. And what happened was this thing was gassed out, and it just didn't end up working. The reason that I will justify this trade not working is because it's in reset, and when you're in reset, you don't know if you're going to get what we call level 3 rise. You have your first push, your second push, and we wanted a third push, and we just didn't get it. That's fine. I knew this trade wasn't going to, I can only say that in hindsight, of course, but I took this trade and I was like, fuck, there's no way this is going to work. But you'll see trades like this. Let me show you.
So there's more to M's and W's. M's turn into W's, W's turn into M's. They're all over the place. And so when you see patterns like that, like a double top or something like that, we're not basing anything on that at all. And we use some of those formations to kind of maybe give us insight. But as far as our entries go and what pairs we're trading, we're not using any of that old school technical knowledge. We're using it to a degree. Let's put it that way. We're not throwing it out the window,
right?
But
because I know that you see it.
Not what we're doing.
Here's here's the thing, Dub. I know you see it, right? So I know. Then I have to assume then everyone else trading sees it. I have to assume the market maker sees it, and I have to assume that every bank sees it. So I'm just not going to even consider that. I'm going to stick to this. Everyone's perspective on trading is so fucking different. You watch my video course, you're going to have a little bit of a different way of trading my pattern than me, because the market is like It's just like the real world. It's so crazy how many parallels you can draw to the real world, because everything in the real world is perception. Every comment, every sentence, every action is all about the perception of the person it's being given to, given from, whatever it is. The market is the same way. Why do you think I use black candles? Because it helps my perception on the market. I don't like to see the red and green, the red and blue. I hate to see the emotion in those colors. So it's all about perception. So back on this trade, I want you guys to understand something. I'm going to open up both of these for you, because if I can get this thing to just cooperate. So this was on April 4th. 2 trades presented. You had this trade I just showed you, which was this bullshit reset TDI that you should just stay away from. And then you had a really nice TDI here on Euro NCD. Okay. So why would I even look at this? It moved up into the buy zone overnight, and I want to go long, and I have the proper shark fin, and I have the RSI crossing into the buys, over the liquid 50 into the buy zone like I like. I have everything I want here. Why would I even consider this TDI? Off the bat, just no, just fucking hard no. You could be wrong and let this thing go 85 pips, higher. That's fine. Let it go 85 pips higher, be wrong. How many times, Dom, do we pick the right direction on things? Honestly, don't even answer them, Dom. Guys, after this thing, go to my YouTube channel, watch all the daily vlogs I have. You'll hear me predict trades, and I'll be like, oh, I think this is going to go long. Oh, it didn't throw an entry, but it went 80 pips. From the moment that I said it was going to go long, I should have just put a buy in. But I never do, because that's not how trading works. You have to have these identifiable patterns clipped on your tool belt, and you can get more of them. Like, I'm going to give you the S1, I'm going to give you the S2, I'm going to give you S3, and eventually I'll give you S4 and S5. But then you can go and learn Kyle, like the other guy from Mo Money FX. His strategy is much simpler than this. It's based on a bounce off a moving average, just one moving average. I got 5 on here for you. But you can go take his strategy, go learn it from him, and clip that on your tool belt as well. And that's how you build a professional. That's how you be a professional trader. Different trading strategies for different market conditions.
There's something that speaks to you, the one that you can see better, the one that you're better at.
Yeah, like
you might be a foul shooter, you might be a 3-point shooter. Yep. Like, everybody's different. But the only thing I can tell you is that we're going to offer you precision. Like, it's not going to be a guess. You're not going to be sitting there saying, should I, shouldn't I be in this trade? Like, you're going to know. Like, the guys that we trade with, we'll have the same watch list, maybe 1 or 2 pairs off from each other. And most of the times, without even speaking to each other, we'll be in the same exact trades. So
100% all the time.
And plus, you're going to get what Austin's looking at in the professional trading team. You're going to get his pairs anyway. Now, he might give you, some days he might give you 2 pairs. Some days he may give you 10, because that's what he's looking at. And then you could start narrowing down, using the knowledge that you're getting from him. You can start narrowing down which pairs, really make sense today, and because you do not need to trade a lot. You just need to win. You just need to keep winning. You need to not lose. You got to keep your losses low and just get into winning trades. And you can make any amount of money you want. It just depends on how much you're going to trade.
I think that there's something, like, I don't know. I don't really, because again, I don't know any of you guys in here except Keenan too, but I don't know who you've worked with or what other groups other than Kyle, but I think people just have trading all wrong, because if they're telling you that they're taking, like, excuse me, I keep burping. The people who trade stocks, it's different. You buy shares of stocks, and it's okay to take small losses and big wins, because you can hedge out of positions a lot easier than you can in Forex. So I don't believe in my personal trading ability will never be to take multiple trades in a day, 8 trades in a day, lose 6 of them and smack 3 of them. Like, it'll just never work like that for me, because of my personal risk strat, like how I feel personally about my money. Okay. So if you're the kind of person that likes to be risky, but the way that I like to put it to my dad, who always calls me a gambler, is I call it strategically risky. I have my strategy. It implies risk because I'm playing with money, but it's a strategy. And if that's what you're looking for and you're not looking to guess every day, then we're going to help you. So let me just show you this. You can see here, this is the professional trading team chat. This is one of the smaller groups. March 30th, I sent them 4 pairs right here. And then I said NCAD, NCHF, and NU short. All 3 NZD pairs on the front, short. N means NZD, okay? And then I said add EA short to the list. Watching NCAD, and this was, I wish it still said the times, fuck. Then I said, watching NCAD and EA short still, that's all I'm looking at. The next picture they got from me was a TradingView idea. They call them ideas on TradingView. And if you click it, it'll show you my trade. And if you scroll down, it'll say entry right before 11 a.m. and then my target was reached. So I actually marked it. Look, you have your shark fin, you have your 1 minute entry, you're in the right position. Liquid 50 was coming down. It was moving out of what I would consider reset, trending down here, and you can click play. Of course, it's going to show you all the way up to today. Yeah. But I have the markup here. You can come here. Here's EA. This, the entry right here on the 1 minute, 10:55, right before 11. It pulled back up to the catch up here on the 15 minute and then tanked down 30 pips. These trades for the S1 pattern, guys, will go on average 20 pips. So you'll see me use a 15 to 17 or 18 pip stop loss most of the time to go and get 20. The risk reward isn't always great, 20 to make, 15 to risk, but I'm not losing that often, so it doesn't matter. Like, I know this pattern works, and that's just me. You're going to have to just trust me from doing this longer than you. And you'll have to try it yourself and see, but you can always adjust. But I know some of these trades, like when EA is falling, Dom, what do you always tell me about EA? When this thing fucking runs, let it fucking run.
It's trending, man.
Yeah, look at the EMAs. Everything is telling you sell. Shark fin high, everything's in the sell zone. It crosses, there's an entry.
Well, so, and with that being said, there's times where I'll see it bottom out and I'll be like, okay, this thing's done. And it could drop more, but
yep.
There's a lot to this, and it's going to get explained to you. It's just that it's not that simple. Like, you see a lot of these guys teaching this stuff. They're like, oh, it's simple, it's easy, it's this, rare with this, look at this, that. It's not. That's all bullshit. That's all bullshit. There's a lot of stuff to this. It's all learnable, but it takes time, and it just takes some doing repetitions. It's like anything else that you want to be good at. You have to do a lot. You have to do a lot of repetitions. You got to see a lot of it, and you got to always learn. You always have to learn, no matter what.
Exactly. And so we'll finish up on here. So you have EA that I just showed you went 30 pips, and this was here in the watch list, and I said add EA short. So I'm telling you that morning to open up this chart and look for short entries. All you need to do is find the 1 minute entry. Shark fin high, liquid 50 cross in the sell zone. It's right fucking there. Put the stop loss in, 15 plus your spread. Put your take profit in, 20 pips, 15 pips, whatever. Go to work. Go do your job. Go do whatever you got to do. This should hit 90% of the time, 88% of the time, whatever month you're looking at. The worst month we've had was 88%. These are going to hit. This is what you need to find. But you only need to trade this. You can't do this and then do 7 other trades for your other strategies and come to me and be like, Austin, why am I not making money? Because I'm telling you to put 7 standards on this instead of 1 standard on 7 different trades. That's the way to do this. That's how trading works. You need to narrow it down, because even here on this day, there's 2 trades, and they were both called on the watch list. NZD CAD went 28 pips as well. Okay? This one, even better looking. Look at the EMAs. They crossed overnight. Everything was telling you drop. You can see my pink arrow here from my video. I still left it in for the markup. Everything's in the sell zone down here. RSI crossed under, shark fin high, liquid 50 cross in the sell zone here on the 1 minute. That's the entry. Look, what was that? 6 minutes of pain, 7 minutes of pain before you're dropped into profit. Come on, right? This is great. Look at that, how the entry candle is touching the ketchup. That's even better. Sometimes these candles are touching the mustard, which is the yellow line. It's too far away sometimes. When it's right off the ketchup, always taking it. Always. This was a downtrending move, a pullback, some type of news here, probably at 8:30 in the morning, because that's when there's always CAD news. This was, what day of the week was the 30th? Can somebody figure that out? Dom, you want to figure that out for me real quick? If it was a Thursday, I'll feel real happy.
So March 30th?
Wednesday?
Thursday. March 30th was Thursday.
Yep. So there's always CAD news Thursday at 8:30. Because there's oil news that comes out at 8:30 every Thursday. Right there. That's that candle. The entry comes later on. Like, look, see, I'm telling you guys, like, I've been doing this so long with just this pattern. I know when the news is coming, you'll start to just feel the rhythm for this shit. Look how it's making lower lows and higher lows as well. That's all you want it to see in a downtrend. Higher lows, lower lows, downtrend. Look for sells. It's very simple. Like, this shouldn't be too complicated. You were going short.
It's those things, and you're putting those basic principles, like, lower highs and, lower lows. It's breaking out. Like, you're putting that together, and where the TDI is, that's like all your foundation. And then there's the entry, and I think that's where everybody gets fucked up. Yep. It's hard to get that entry, that right entry. You're like, oh, everything's trending down. You get your entry, and next thing you know, you're fucking, you know, I don't know about you. I don't know what you guys trade, but I'm like $500 down at the, you know, in 2 seconds. So it's important to get these, you know, when he's saying no, when Austin keeps repeating no pain, you know, you don't want to go through that like -10, you know,
drawdown. Yeah, you can't take you don't want to take drawdown.
I mean, you'll see them. It'll happen. Look, nobody's perfect, you know, but you know, you want to strive to, you know, go right into profit on a lot of these.
Let me show you guys something else. So here, you guys see, I'm showing you in front of you. I have all this shit documented, winners and losers. So if you want to sit down with me and go through this, I can show you everything about this pattern that there is, because this is my pattern. However, excuse me, on 320, there were 4 good trades that presented. I remember this day because there was so much money this week. Look at this. On 315, you had 4 trades. On 316, you had 4 trades. And on 320, you had 4 trades. So within 5 days, you had 12 opportunities to trade. Now, if we go and look at the perfect trades, the ones that I'm telling you to not trade reset TDIs, between 315 and 320, you actually only had 8. So it takes it from 12 opportunities to 8. Now, we'll look at 320 first, because on 320, there was only 1 good trade to be in out of 4. Here on 320, we'll open up all 4 charts. We'll start at the bottom. NZD USD. This is a trade that I would tell you to avoid. Why? If you know, I have the chat open, you can chat and tell me. Or unmute yourself. Speak up. Let's see who's got balls. This is a trade that I would avoid. I'll tell you, I'll give you the first one. Because you're in the buy zone here overnight, but the liquid 50, which is this yellow line called its market sentiment, was dropping. When the liquid 50 is dropping, you're coming into reset, and it's sometimes difficult to catch trades out of here. This trade only went 11 pips from entry. It threw an entry. It only went 11 pips. It was a 15-minute railroad. It only went 11 pips because it's coming into reset. So I would say, fuck this trade. You don't want to be involved in any, you can never go long when the liquid 50 is dropping. I don't care what you tell me. Just let the winners go. This is a winner. Like, you're still going to get 10 pips here, but I don't want 10 pips. It's not worth the risk when I'm trading some bigger lots. Now let's look to the next one, NZD-CHF. This one's even weirder. This is one I was not involved in as well, because I don't like trading these large erratic candles, because you never know what can come after that. So you saw this thing break the blueberry and hold. Pins, 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 just not breaking the blueberry. In hindsight, this looks like a Rocky. But in reality, Dom, you remember this. We did not want to get involved in this, because this huge movement up so quickly, we were like, yo, this is reset. At any moment, he could come back down, because
yeah,
which way's the liquid 50 going?
Right. We're not trying to win every, you know, we're not trying to get in every winning trade.
Yo, these present almost every day, guys. Almost every day they present.
Our strategy is not to find, you know, to get in every single winning trade that we see, because we see a lot of winners and we let them go. Our object, and if this isn't for you, then this whole course is not for you. Our object is to win the ones we get in. We want to be high percentage winners. We don't want to lose money. We don't want to go negative. Right. So our whole strategy is based upon that.
Right. So here, guys, again, this is one where as soon as you watch the video course, you're going to learn. Austin says don't trade dropping liquid 50s. After a certain amount of time, you're going to get comfortable with this pattern. You're going to be able to decide if this is too steep for you to stay out of or not. Right, Dom? People will start to build risk tolerance to say, yo, that's not dropping to me. I can stay in. I can trade this.
So Dub's asking, so in that trend, going long would have been against the long-term trend. We're not really, we're not always looking at like long-term, since we're trading short periods of time.
Let me take this down. Let me take this. The long-term trend, Dub, is bullshit, because there are this goes back to my, and again, people will tell me I'm crazy. Like, I've gotten people that commented to me and wrote me emails about the video course that was like, yeah, your philosophy of news and long-term trend is wrong. They can think whatever they want, but I'm telling you, with flash crashes that can happen now more than ever, with news events where the market can do whatever the fuck it wants, long-term trading is foolish, and trying to understand long-term trend, this blueberry is taking into account every erratic move that has happened over the course of the last couple days. Why would I be able to trust that 100% if I'm only looking to be in a trade for an hour, maybe 2 or 3 at most? The time frame that I'm holding these trades is so important, and that's why people do not understand that I don't care about any type of long-term trend. Here, the short-term trend to me, Dub, would be, hey, it broke the blueberry, which is this blue line. You'll get that in the video course, and it held the blueberry by never breaking it. If anything, this is in an uptrend for sure because it's holding it. See those pins? Those pins to me tell me everything I need to know, and the EMAs crossing. When you have EMAs crossing in a direction, water crossing blueberry, purple dragon crossing blueberry, and then later you had the mayo cross, that's all telling you, here you have the ketchup and mustard cross the blueberry, it's telling you the trend. The reason, like you wrote in the chat, Dub, is yes, you're going against the liquid 50, so just stay out. And when we get done showing you these other two markups on this day, when the trades are presenting, you'll find one of them that's trending right, and just be involved in that one. And maybe you'll find two, be involved in both of those. And again, once you understand this pattern entirely, which all the details are and there's checklists and there's term sheets in the video course, once you really understand this, you'll be able to say, you know what, fuck that. Austin said that's dropping, but you know what, I'm going to take a risk. I'm going to wait. And that's fine, because I remember looking at this trade and saying to Dom, look, this is consolidation. It's coming into reset. So you see here, broke the blueberry, held. This is just a basic triangle pattern, right? My lines don't need to be super accurate. This is coming into reset, coming into consolidation. How do I know that? The candles are making higher lows, right? But holding a level here at the bottom, but the liquid 50 is dropping during the session. Okay, so 9 o'clock is somewhere in here, noon is right here. So during the New York session, the liquid 50 is dropping. Normally you'll see these things, yep, descending triangle. Normally you'll see these things shake out later in the day. At noon, this thing decides to shake out and follow its trend. It won't always shake out in that direction though, right, Dom? Won't always shake out the way you want it to. So it's better to avoid these. Trade when the liquid 50 is helping you. So let me show you GA really fast. Here, this one's even tougher because it's looking like a snake into the sell zone, coming up into reset, and then of course in hindsight you see it go into the sell zone. But look at the EMAs. You see the crossing. You see everything start to turn down. I said, is this a 4-candle railroad for price? Maybe it is. Maybe it's not. I remember this day, and I remember saying to Dom, let's just not take it, take a picture of it, and we can learn something. What can we learn from this trade? Well, trading these trades into reset, sometimes you'll win, and sometimes you'll lose. So what is the lesson, Dom?
I just want the ones that win.
Yeah, just let this go, because at the same time, look at this trade. Same day. This is at 10:45. This trade was at 10:45. See the time at the bottom? Same exact time. You have a better TDI. You're selling. It's in the sell zone. The RSI is under the liquid 50. The EMAs are crossing. The blueberry is above the candles, which means downtrend. We've broken the blueberry, down, and it's 50 pips to the bottom. This is the one you need, not all four. Do you guys see how serious I am about this being super picky and missing winners? You missed 3 winning trades. This one only went 11, this one went 21, and this one went 75. You missed all 3 of these trades because you don't trade reset coming into reset. You don't trade, shitty TDIs. That's what I call them. This is a shitty TDI. Now, compared to that,
we just don't. Like if you took all these trades, they'll be all over the place. It's like M's and W's. Like if you try to trade M's and W's or descending triangles, or they're all over the place. Like you can't win consistently on that kind of stuff. We have a strategy that is just a higher percentage winner. It wins in the 70 to 80 percentile range.
If you're bad,
if you're sitting there trading triangles and waiting for that breakout and stuff like that, like we might draw them and just to show you stuff, but we've never ever entered a trade on a triangle, a consolidation period. We've never entered on that. There's a specific pattern that we're looking for.
Dub, you're correct. Exactly. Now let me show you one other thing that increases probability in my favor even more. Watch. When you look at the market in the beginning of the day, you can clearly tell that this liquid 50 is rising into reset. This is dropping into reset. This one's dropping into reset. But this one was just flat. Everything's in the sell zone. It's flat. When I'm trading, I either need to be having everything flat or going in the direction that I want it to go. Now, when I find the one that I like, which off the bat was this one, this one because of the 15-minute TDI. This is what we're basing this decision off of. And I just want everyone to know that you can't take everything I'm telling. Don't try to take everything you just learned here today and trade this, because I didn't give you all the parameters that go into the TDI in the front end. There's 2 more parameters in the beginning that I just don't want to tell you because I want you to buy the video course. Honestly, that's just me being honest. To save you money, don't take what I'm telling you here and just apply it. You're not going to win all of them because there's more parameters. But this one works in my head, and it should make sense to you guys because of correlation. Euro NZD, you're going short. I was also watching GBP AUD, which has no correlation to Euro or NZD, but I'm watching 2 other NZD pairs on my watch list that day. Both of these NZD pairs have NZD on the front end, and both of them, both NU and NCHF, I wanted to go long. So when I see that, and I think, all right, they're NZD on the front, I want to go long, but the TDI here is better, and Euro NZD is on the back end, and I want to go short, no brainer. Correlation lines up. I found my winning TDI. I found my fucking trade. I'm waiting for my 1-minute entry. Shark fin high, liquid 50 cross in the sell zone right here, 1052. Take it, sit in pain for a few minutes while it pulls back to the catch up. You're 16. Because this was a railroad entry, I only needed, a 15 plus a small spread stop loss. 15's pip stop loss was safe. 16 was safe. Even if you wanted to put it above the blueberry just to be safe, fine. Whatever you want to do. Look at the trend. You know what I mean? And a lot of the times, guys, I take into account, and again, I can't go into too much detail, so this is where we'll wrap it up. I take into account average daily range. Whichever pair looks the best, plus has more space left on its average daily range, I'm going to trade that. If it's already maxed out average daily range, I won't trade it. I also have a couple Asian session rules that will validate the Asian session for me. For example, if it's not within a certain range of pips, I don't trade it, because if the Asian range is blown out, that to me tells me that the market maker needs to do some crazy shit that day, and I just stay out. I also won't trade if it hasn't broken initial high or initial low yet. So there's a couple other rules that I go into in the video course that I think you guys will find a lot of value in. But that's really all I want to go into today. So if you guys have any questions, now's the time. You can unmute yourselves. You can type them in the chat, whatever you want to do. What I want to do right now is give you guys the code in the chat for the $50. $50. It's going to be the Mo Money FX discount code. So if you click that, it should take you right to PayPal. Yep, cool. So that link will take you guys to PayPal. If you do decide to sign up with us in the next 2 days, you'll be able to use that link and get the membership for $50 for your first month. It's only going to enroll you for 1 month. I'm not going to auto enroll you the second month. We'll have to talk and make sure that you sign up for the $99 a month moving into June. So other than that, guys, I'm done. My mouth is kind of dry. I want you guys to buy the video course if you think it's going to help you. If you like the strategies you're using, that's fine. Good luck to you. And yeah, unless you guys have any questions, and we'll hop off. Dom, did I cover everything pretty well, you think?
Yeah, definitely. Absolutely.
Good. Yeah, very informative. You're welcome, Dub. Thank you guys for getting on. I appreciate you guys getting on. I literally had 43 people register, and we had 6 people show up, and Dom and Jake were 2 people that didn't even register. So it's funny how many people.
It's a holiday weekend though, so it's a tough weekend.
It's true. But I think that for the people that are looking to make money, looking to make this a career, make this long term, you gotta make a little bit of a fucking effort sometimes. You know what I mean? Especially when I'm giving out free info. So sucks for them.
I was running it. You gave out a lot more info than I would have.
Yeah. So we and I'm giving.
But don't try to apply a lot of this stuff because there's a lot more that goes into this. So I don't want to see you guys try to apply some of these like really, really quick lessons and try to make money because like, hey, the TDI is in the buy zone and you can buy, because you can't always buy. There's a lot of times that we
there's a checklist. No, there's a checklist, guys. I have a specific checklist, and you get the checklist when you sign up with us. It's in the video course. I tell you to pause the video and screenshot it. It's very simple. The checklist works. But this is about money. Very informative, but this is about money. Very true. True that. All right, cool. Yeah. So, guys, $50 first month. You get the video course. I will send you. It's a separate video. When you use that link I just sent you, you have to make sure you message me so I know to email you the download for the video course. Okay. So I'm going to again put the link here, and I'll put the email address.
Yeah, and copy that now, guys, because if once we shut this chat down, you're not going to have access to that.
Yeah. So guys, we're good. If you want to hop off, you can grab that info, the link right there, the email right there. You can add me on Facebook. It's just facebook.com/austin.silver. Like a period. You can add like everywhere, guys. I'm on Instagram, whatever you need. I'll help you out as much as I can. And then hopefully we'll get some of you on the course. The plan should be also, guys, if you join the professional trading team, I'm going to give you access to the scalping strategy that we're working on called the S2 pattern. Plus, I'm going to give you access to the S3 pattern, which I'm working on, which is more long-term. So there's a lot more stuff that goes into this. I don't have video courses done on those two yet because I just don't feel ready. It took me a year to make this one, and I want to make sure I'm ready on the other ones. So, but if you're in the group, you get me talking about it every day, so it'll help. Cool? All right, guys, then we're good. If you want to hop off, I'm going to actually just mute myself.